Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're going to be going back and revisiting a topic we haven't covered in a while. It's an indicator that some traders use in their efforts to follow the money. It's actually known as the Money Flow Index. We're going to be talking about how it's constructed, how it might be used to generate trade signals on a stock chart. We're actually going to be placing a trade using that indicator. A lot to cover. Go ahead and chat in. Let me know if you're familiar with that Money Flow Index indicator. Not the Money Flow indicator, by the way, Money Flow Index. But before we get to any of that, let me first of all say hello to everybody that's joining us out there in YouTube. Hello, happy Friday, everybody. Great to see Greg and Ray, Life in the Fast Lane, Kelly, Chris B, Frank, David, Sharon, Ted, Scott, Will, Kevin, Jim, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after this live stream has been concluded, enjoy the presentation, but be aware that you're invited to join us in the live discussion if you'd like to be here. This is a Friday webcast series, as I've already mentioned, and this one is kicked off every Friday at 1 Eastern time. We'd love to have you here in the live stream audience. If you'd like to be here, be great to have your support. In any event, as a special treat for our live stream audience members right now, we have my very good friend Mike Fairborn. He's going to be hanging out in the chats with us. He's going to be addressing any questions that I can't get to. Mike and I have worked together for years and years and years, and we are good friends, and it's great to have you here, Mike. Thanks for having my back. Mike and I would also like to issue an invitation to everybody watching. If you have an account with X, you should be following us there on that platform. Another great way to connect with your favorite presenters in between these live streams. You can find Mike there at Mike Fairborn CS. You can find me on X at Cameron May CS. But let's get into this discussion. And as we do, of course, we need to consider the risks associated with investing. Risk is real. It applies to charting and to trading. So bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. Investing involves risks, including a loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. All right. So, with that said, let's set an agenda for today's discussion. What are we going to be talking about? Well, first of all, we're going to have a look at our existing position. We only have one. Talk about another one that just closed, and then have a look at the current market conditions and just use that as a quick backdrop, technical stage for what we're going to be discussing today. Today's topic is going to be all about this indicator known as the Money Flow Index, which some traders do use as a gauge to just follow the money. That's the concept. It's a combination of price and volume combined into a single indicator. So we're going to talk about how it's built, how it might be used to generate trade signals, and we'll go place an example trade today. So let's go right to the thinkorswim desktop trading software platform. And let's look at our existing position. Right now we have a position on Kroger, but there was a position that was automatically concluded. In between these live streams, we had a stop in place. This was stopped. So let me just show you what happened here. We have our advanced micro devices position that was taken on a combination of signals. First of all, we had the exponential moving average. That was a 9-period exponential moving average, quite short term, combined with some day-to-day candles, but in this case, not traditional candles. Instead, we used Heikin-Ashi candles. And when we saw those Heikin-Ashi starting to get more bullish on top of that 9-day exponential moving average, that was our entry signal. Now, last week when we convened, we noted that we had come back down through that 9-day moving average. So we moved our stop up, and that stop has been triggered. We're closed out of this position. We can actually see that if we go back to our monitor, back to our account statement. That trade was taken on July 11th, concluded on the 6th. Today is the 8th. So bought for 146.67, sold for 163.06. That resulted in that 1639 profit, about 11% return. Not a bad trade. Doesn't always work out with these sorts of technical approaches. And in this case, it did. And interestingly enough, I think Oh, and Bob says, can you highlight the differences between money flow and unbalanced volume indicators? Yes, I will, Bob. So the one that we're going to be discussing today is significantly different from unbalanced volume. There is another indicator. So we're going to be talking about the money flow index. There's one that's just known as money flow. It's the same thing as unbalanced volume, maybe a slightly different interpretation from one trader to the next, but basically the same thing. All right. So there's my short introduction, the comparison of those two. But what I noted here, let me clean things up. We don't need these expiration dates here. I'm going to come up here to the top, click on my little gear icon. Let's go to the time axis and take off those expiration Fridays. We don't need that for this discussion. But what I do notice here, we're done with this trade, but what do we see again happening just now? We're rising above that 9-day exponential moving average. We have the Heikin Ashi candles are getting more and more bullish. We had a reversal candle just yesterday. That's when we have a small body, kind of a spinning top-looking pattern. When using Heikin Ashis, that's quite typical of a reversal from either bullish to bearish, or in this case, from bearish to bullish. Should we take another position? Let's do it. So we had 20 shares. Let's go back and place another order. Let's buy 20 more shares. I'm going to click on the ask price here. Let's crank this up to 20. I'm going to put this in as a market order. All right. Market order obviously has risks. We might not be thrilled with the price we pay. It's showing 171.96 at the moment. That changes, and it can change rapidly in fast market conditions. But we're going to put in an order to buy. No commission on this trade, but with market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. So let's send that off. We're now back in. So one profitably concluded trade. We'll see if this one continues, but we're going to stick with that position. And let's have a look at our current other position. Oh, by the way, that popped down here into unallocated. Let's go pull it out of there. Right click, move to advanced charting. There we go. So we also have Kroger. So let's go have a look at what's going on with Kroger. Trade's doing fine, up $212 at the moment. This is last week's trade. So last week, if I come up here, let's change our style. We used traditional candles for this one. And we had a different set of studies. So let's load up our Kroger DMI crossover study set. Chris says, should we add a stop to the AMD trade? Yeah, Chris, let's go back and do that. Let me finish this. And commonly the question comes up, can you add stops to existing positions? Yep, this is going to give us an opportunity to do that. So last week we talked about the DMI indicator, and we saw that it had a bullish crossover as positive DI was crossing above negative. So we took an entry right there with the plan that if we got a bearish crossover, a subsequent bearish crossover, that's when we'll exit. Right now, trade's doing just fine. But if you didn't happen to catch these discussions, if you're wondering, Cameron, what are you talking about? Heikin Ashi candles, never heard of that. Or DMI, I don't know what that is. Well, this webcast series, we go through a good number of potential technical tools. And the nice thing is, these sessions are recorded and then posted to our YouTube channel. So let's go right to that. By the way, 2 recommendations I might make here. Number one is if you haven't subscribed to our Trader Talks channel on YouTube, do that right now. You can pop down the lower right-hand corner of your screen, click on the subscribe button. It only takes a second. It doesn't cost anything, but this is where we house our previous playlists. So for example, I could go to Trader Talks Schwab Coaching Webcasts on YouTube, go to the playlists, and I can scroll. We have a bunch of different web series covering a range of investing and trading topics. My series happens to be about halfway down the page. You'll look for advanced charting techniques. And then if we click on view full playlist, there's a list of previous webcasts, including trading the directional movement index, which was last week's topic, or down a little bit further, short-term trade systems using Heikin Ashi candles. So those will explain why we placed the trades that we did and the timing and all that sort of thing. So the other suggestion that I might make is that you follow Mike and me on X. Mike has already posted this in the chat window, but just be aware, you can follow us on X at Let me just put these down here on separate lines. At Mike Fairborn CS, at Cameron May CS. And that's a great additional resource. For example, if you were to go there today, I have this question for everybody. What do you think of a big gap down like what we saw on FTNT? Do you see that more of a big warning, or is that a potential opportunity? Now, obviously, the answer to that is going to possibly vary from one stock to the next, but just like your input. And when you reply to one of my posts, I try to reply right back to you. Okay. But let's get back to our Kroger position. This one seems to be doing fine. We have a plan in place. We'll keep monitoring this into future webcasts. So for now, we'll just let it work. So now, before we go have our discussion of the money flow index, let's see what's going on with the markets. I'm going to flash over here to the S&P 500. One thing that we've noted several times in recent webcasts, in one of my webcasts, is that we broke through these previous all-time highs on the S&P 500. They held through this bearish contraction. And then we've had the fastest recovery in history right here. It broke through that previous ceiling, and that seems to be acting as a pretty solid floor. It's not a guarantee that it's going to continue doing that, but for right now, it's doing that. Now, over the last 6 or 7 days, we've been seeing bull, bear, bull, bear, bull, bear. But what's happening with the highs and the lows over that time? We're seeing consecutively higher lows, consecutively higher highs. Let's say that our trader has a bullish outlook from that perspective. But in this webcast series, we also bring in a set of technical studies to possibly assist the trader with making these sorts of decisions. So let's go up here to our studies. Let's load up our S&P strategy set. There it is, the TVM strategy set. So TVM stands for trend, value, and momentum. And so this is a set sometimes used by technical traders to identify, what's the general trend and where are the short-term highs and lows. That's the effort that's being made here. And the trend is confirmed by a combination of technical indicators. We have 2 moving averages. Now, these are not simple moving averages. They're not exponential moving averages. They're actually something known as a triangular moving average. Now, how many of you can remember right now, what is a triangular moving average? I'll be impressed if it's more than half, because a lot of people just haven't even heard of these things. If you haven't heard of a triangular moving average, we're going to be using it. This is a spoiler alert, in combination with our indicator that we're going to be introducing ourselves to today, the money flow index. But a triangular moving average is based on a simple moving average. You know how a simple moving average, we just look at the closing price over a range of time and calculate an average and then track that over time. That's what a simple moving average is. Well, a triangular moving average is also known as a double smooth moving average. It's intended to slow down a simple moving average, smooth out the bumps. You'll notice how smooth these averages are. They tend to just be nice little smooth waves. And it's really just it's built on the simple. Now, I'm going to explain exactly what that triangular moving average is in just a moment here, but I've got to say hello to New York. Guys, for those of you who are attending the live stream right now, we've just been joined by our New York Technical Analysis and Options Workshop. Great to see New York. Hello. Say hi to Ben and Scott and Ray and Kevin in the back. I've worked with those guys for years and years and years, and they are a great resource. I hope you guys have a great event out there. So everybody that's already in our chats, chat in. Say hello to New York. But today we're talking about following the money using something known as the money flow index. Now, at the moment, we're just reviewing what's going on with the S&P 500 through a set of technical studies that we use each week in this webcast series. So I'm just going to go back to that and pick up where we left off in this discussion. But I do have a suggestion for my friends out there in New York. You're about to leave this webcast. Go enjoy the presentation from Ben and Scott and Ray. But you can follow your favorite presenters what I'd suggest you do right now is sprint over to X if you have an account on that platform. On X, you can follow my buddy Mike Fairborn. He's helping me out in the chats right now. At Mike Fairborn CS, you can follow me at Cameron May CS, and I'm sure that Ben and Scott and Ray have also told, or actually Ben and Scott, yeah, they've told you how to follow them. But hi there, New York. Anyway, we were just talking about the triangular moving average. And as I mentioned, it's built on a simple moving average, but instead of using the day-to-day closing values and calculating an average, it takes the simple moving average value each day and gets a moving average value of that. So it really does, it's a double smooth. That's what it means. Tends to be pretty close in its functionality to the simple moving average. But maybe for those traders that are trying to eliminate sort of day-to-day whipsaws, that's where it might offer some benefit. Now, obviously, it's not a guarantee. It's going to work every time. But those are our triangular moving averages. And each week we look at the 50 versus the 100. And for some technical traders, if that shorter term 50 period triangular moving average is above the 100, that's the longer term triangular moving average. If the shorter term or intermediate is above that longer term, that may just be a confirmation of trend strength. So, yep, with the S&P, 50 solidly above the 100. So that would be a check in the box for these sorts of traders for bullishness. Now, even within a bullish trend, there might be better or worse times to enter. And for some traders, they prefer to try to get at lows within or enter in new bullish positions at or near lows. So what they may look for from our value indicator. Now, our value indicator here is going to be RSI. It's an oscillator that goes back and forth within a range. And commonly, when that trend is strongly upward, they might look for RSI to dip down below 40 as an indication of maybe particularly strong short-term value. We're not there yet, but we are recovering from recent lows here. But for a value investor, for a value trader, I should say, they might look for a combination of factors like trend bullish, but our RSI dipping down below 40. And you might say, what's that 30? Isn't it supposed to be 30? Well, with strongly trending markets, it's actually relatively uncommon to get down below 30. So there might be an adjustment by some traders to just get down below 40. All right. In this case, looks like we're bullish up here on our trend indicator, strengthening on our value indicator, and our momentum indicator, the MACD histogram, has dipped down below zero, but has started to rise back in the direction of zero, which may be an indication of price momentum picking back up, going back up. So GB Invest is learning technical analysis, good stuff, good to hear. So overall, let's say that this technical trader looking at this combination of technical factors, maybe they're looking pretty bullish. Now, even done all this homework doesn't guarantee that the markets are going to continue going higher, but through this one particular technical lens, it's looking pretty solid. So for today, we're going to be looking for bullish signals from our money flow index. But let's talk about that money flow index. And to introduce it to you, let's just bring up a stock here. I'm going to bring up JPM. And I'm going to hide this left column. We don't need to see that anymore. I'd like the extra space here. But let's clear off our study set. Go up to studies. Let's just remove all the studies. And let's add our indicator. So as I go up to edit studies, I'm going to start to type in money flow. Okay, just the word money will get us narrowed down to the indicators that start with money or they include money. But I do want to point out, we are talking about the money flow index today, not just plain money flow. The question came in earlier. Who asked that question? Because I want to go back to it. Somebody asked for a comparison of this versus the on-balance volume. There it is, Bob. Bob asked about the money flow versus on-balance volume. They really are essentially identical indicators. So if you're familiar with OBV, money flow, you already know it. Money flow index, though, is actually, it's a similar concept, but its construction and its appearance on the chart, the signals that it generates, are substantially different. It's not going to look anything like that on balance volume. So let's add that to our chart and click apply. So what we're left with now are 3 lines. We have 2 horizontal lines, one at 20, one at 80. Then we also have this sort of jagged looking oscillating line. And as you might already suspect, with so many other indicators that are oscillators that have overbought and oversold areas, that's what we're looking at here. We have oversold down below, we have overbought up above, and then we have this flow of money indicator that's just oscillating back and forth between those ranges. So I'm going to give a quick introduction to this, but let me do this. I'm going to put a link in the chat right now, because I already covered this topic about 6 months ago, and I did a detailed introduction to how this is calculated. I literally went through the calculation, ran through some example numbers so that we really understand how it's built. I'm not going to do that again. I think it would be redundant. So instead, I'm just going to paste that video. Now, if you don't happen to be, I just put that in the chat for everybody to reference. If you don't happen to be on the live stream, you can also find this video. Just come here and scroll down about 6 months back until you see follow the money. How? So this is how might a trader follow the money, consider the money flow index. So that's the last time we talked about it. And toward the front end of that discussion, I went through step by step how this indicator is calculated. But I do want to summarize how it's calculated. Really, there are 4 steps. I'm not going to give the precise algorithm and get into those weeds. But basically, this is my own little summary that I've written up. Step number 1, find what's called the typical price. What are we talking about with a typical price? Well, we look at a day, and we look at the high, low, and the close, and we get an average of those 3, and that tells us sort of what a typical price was for that day. It includes the total range and where the stock closed. Average of those 3 gives us what's called the typical price. And then we look at the change in the typical price from one day to the next. So if it helps to envision it, it's going to be somewhere toward the middle of each day's candle, not exactly in the middle. But we're just looking at, did that go up or down from day to day? So that's an indication of what price is doing. But is that a true insight into the flow of money? Because if the price went up, but there was hardly any volume, was there really a significant bullish change in the flow of money? Probably not. Or if the price went down on very light volume, is there a significant outflow of money from this stock? Probably not. So step number 2 is to incorporate a volume metric. So we multiply that typical price by the volume. I'm going to abbreviate that to vol, and that's going to be either positive or negative. So just like with on-balance volume, we take that day's volume. So let's say that typical price went down. Ooh, that's negative. Well, we take that day's volume and multiply it by that change. And that gives us the sort of a flow of money for the day, all right? So sometimes that's going to be a positive number. Sometimes it's going to be a negative number. Well, the next step is to, over a 14-day period, let me see how I decided to phrase this. We just determine a ratio of positive versus negative over a 14-day period. Now, I'm saying 14 days, but if we're looking at a weekly chart, it would be 14 weeks. An hourly chart, it'd be 14 hours. But the ratio of positive, negative over a certain period of time. And then finally, we plot that as a 0 to 100 index. That's what this is down here, 0 to 100. So that, in a nutshell, encapsulates what's going on with this money flow index. If you want to see the precise calculation and an example using some numbers so that it gives you a little bit better feel for it, that's great. But I just didn't want to spend too much time on that. But I did want to capture the essence of what this money flow index is attempting to measure. And that is price going up or down? Is the typical price going up or down over time on strong or weak volume? That's the bottom line. So when we see this oscillator going down toward that oversold, then very likely what's happening is our typical price is coming down, and it's coming down on pretty strong volume, increasingly strong volume. Now you'll notice this oscillator going down, what's the price actually doing? Notice it's not just a strict confirmation of price. It's a weighted gauge of the flow of money. That's quite different. So when we see this dip down into the oversold range, for some traders, they might think to themselves, wait a minute, if we can just get that flow of money going in the other direction, that may present a short-term opportunity, a short-term value opportunity in this case. And if we start to rise out of that oversold under 20 range, for some traders, that's a significant signal, time to get in. And that looks like that happened right about, where is that? Right about there. That did a pretty good job, not a perfect job, but over the course of these several weeks, pretty good job of identifying a relative low, and you can see what price did after that. It's not always going to work out perfectly. In this case, it did a pretty good job though. And you can see back here, got an oversold condition. Rising back up above 20 is the signal that we're getting that shift in the flow of money again. So getting below 20 is step number one in generating a signal. Crossing back up above 20 is step number two. And in that case, we got that crossover. It looks like, let me put an oval around this so that we can see these more precisely. There's our crossover. And it looks like it happened on this little white candle day right there. Did I get those in the right spot? I think so, pretty close. So if that is a potential bullish entry signal, what might be bearish? Well, I'm going to leave you in limbo for just a moment before I explain that, because we have a survey in the chats and we don't always get surveys. So I'm going to call attention to it when we do. Guys, take a look in the chat window and then click on that survey link. If you see it there, click the survey link. Give me if you'll just wait to fill out that survey until the webcast is over, that's when you can give me some honest feedback. I'll just set the stage for you this way. It's a really short survey, 2 multiple choice questions. There's a comments box and a suggestion box as well if you want to fill those in. But if you take the time to fill out that survey, I always take the time to read through that data. I read those comments, and it's always helpful, always appreciated. So thanks, Mike, for reposting that. Definitely appreciate that. But let's get back to our presentation here. I think you might have already guessed one potential exit using this oscillator. Well, if the flow of money continues strengthening, the trader may just decide to stick with that position, maybe until we reach an overbought condition. Then if we start to see weakness, if we see a subsequent shift in the flow of money, where we start to fall back down out of that overbought, that might be a signal of a significant shift in overall money flow sentiment, and that might be an exit. Now that's one potential exit. Other traders, maybe they see the initial overbought, they see that entry signal, they might just look to get out at the most recent previous high. So it looks like there was a previous high here. That might have been an exit signal. Here, this one's interesting. Here we got an entry. We never got to 80, so that didn't work, although maybe if we waited to this one, it would have. Did we ever get to our previous high either? Nope. So if we were to go to this previous high here, that probably failed. And our trader probably sat through some choppiness or hit a stop loss. Yeah, so that would have been an unproductive trade. This next one, there's our entry right here. Previous high would have been pretty tight, or maybe waiting for this turnaround right there. But this is the reason why for some traders, they add a trend filter as well. What we may notice is that when this signal was generated, what was the overall trend of our stock at that point? Let's put that right down to where that signal was generated, right there. That trend looks like it was in question, very likely. So for some traders, they may combine the generation of signals using the money flow index with a trend confirmation. And a common confirmation here, going back to our triangular moving average, is using a bit of a slower trend. This is not a signal that shows up all the time. In all of 2025, or all of the last 12 months, I should say, including stretching back into 2024, there have only been 3 signals on JP Morgan. And some other stocks, we may have only seen 1 or 2 or even 0. They're relatively uncommon signals. So if they're not generated very quickly, pairing them up with a quick moving average might not work. Just the time frames just don't line up. So let's load up a slower, longer moving average. So I'm going to go up here to our edit studies. Let's add a triangular moving average, which we were just introduced to. I'm going to add that to our chart, and I'm going to go longer than just 9 days. We're already using 9 days in another trading approach. That one's for quicker entries and exits. This one's going to be slower. So let's slow this down to, let's say 100. Actually get the 1 in there. There we go. Let's click OK and click Apply. And so here might be the trend confirmation. The trader may be looking, well, did we get down to that sub 20, to that oversold condition on the money flow index? And at the same time, was price above our longer term trend? That could be the confirmation. If price is stronger than trend, that might be adequate to be bullish. In this case, we generated a signal right here. Note where that price was relative to our trend line. It was below, and that might be a disqualifier for someone who uses a trend filter. This one came while price was strong above that 100 triangular moving average. All right, so that is one way that the money flow index might be used to trade. But as I mentioned, this is not a common signal. So if we were to go, we could go over to our watch list of S&P 500 companies and start going through these 500 companies. We could probably go through those in a few minutes. It wouldn't take very long. But wouldn't it be nice if we just could run a scan for this set of circumstances? Let me do that. Let's go to first of all, our scan tab. Actually, I'm going to be doing this. This is a paper money account. And I'm going to be using technical filters or study filters on Thinkorswim, and those are only available on the live platform. So I'm going to bring up my demonstration live account. You can tell it's the live one because I'll set the color scheme to black so that I can tell the difference between the live and the paper just at a glance without even having to look up here to see if it is the simulated environment. But here we are on the scan tab on the live platform. I have some stock filters. I'm not actually going to use any of those. Let's clear those out. And instead, we're going to add a couple of study filters. Let's add one, and let's add a second. The first one is to confirm that price is strong. Now, I'm going to step away from that 100 period moving average for just a moment, and let's just use a price performance study. Okay. Kelly says, set a scan, an alert, a watch list. Yeah, we can do all that, Kelly. Today, I don't think I'm going to be setting up like an alert, but if we were to save this scan, it would save it as a watch list. Well, let's go to price performance. And I've used this in recent webcasts. Let's do it again. Let's come down to near high lows. That literally just means that the price is near highs on a 1-year chart by default. So when we select the near high lows as our study, the default is going to say the current price is within 3% of the 252-day high. Why 252 days? Because there are 252 trading days in an average trading year. Sometimes 251, sometimes 252. But that's just saying, first thing we're requiring is that we're within 3% of a yearly high. I'm not going to require quite that rigid, quite that strict a requirement. Let's back that off to within 10%, allowing for some volatility, but not stocks that are down close to lows within that 10th percentile of the highs. Okay. Now let's add our money flow index. So this one, we're going to do a custom filter. We're just going to go down to custom. It's going to default to ADX crossover. Let's just delete that one. And we're going to add a condition using a technical study. And specifically, it's going to be the money flow index. So let's type in money, choose money flow. And we're going to look for that money flow index, just leaving the defaults in here. So it's still using a 20 oversold, an 80 overbought, a length of 14 over the 14 days. But we're going to be looking for that money flow index crossing above a value in that index. So what value? Well, we want it crossing, we could say 20. Now, as with RSI, when the markets are really strong, it gets really uncommon actually for the money flow index to stretch down below 20. There may be one or two stocks out there in the S&P that have seen that over the last week or so. Doesn't happen very often. So for that reason, some traders might not be looking for quite as deep a dive in that flow of money before it starts to reverse. Let's say we're looking for at least getting under 25. Then let's say we don't need that to happen today within one bar, but within the last week, within the last 5 bars. All right. So let's save that. That's our whole search. Let's click OK. And let's run this search through the S&P 500 companies. Let's go down in alphabetical order, choose the S&P. It's not every trader looks only in the S&P. Some might look in the NASDAQ. Some might look through all stocks. And I'm going to limit it to just those market giants in the S&P 500. And let's run a scan and see how many S&P 500 companies are trading within 10% of their annual highs, and their money flow index has crossed above 25 within the last 5 days. This looks like it's taken its time. Sometimes when I run a WebEx, when I run a big event, it can slow down. It can put kind of a drag on my bandwidth. I suspect that's probably what's happening now. It's okay. Nice thing is, I already did this, so I already know what the results are going to be. Are pretty close. So let's go have a look at some of those stocks. One of those was MMM. Let's see what's going on with MMM. Is it trading within 10% of annual highs? It is. Is it above its 100 period triangular moving average? It is. And did it recently just reach below 20? It's hard to see, but there's our 20. It got even below 20, but it certainly got below 25. So our trader here might say, hey, this is starting to strengthen. Obviously, had we seen this a few days ago, maybe the timing might have been a little bit more precise as far as these sorts of traders are concerned. But the stock is starting to strengthen off those lows. I think some of those others that we're signaling today or within the last week are okay. Oh, yeah. Yep, trading above its 30. Just had a pretty strong sell-off on an earnings. Look at the size of that hammer candle. But we got down below 25 in this case, teased at 20, and we're starting to strengthen again. That flow of money might be coming back. We're starting to see price rising, accompanied by volume. Might be a signal there. Which one of those two? Because I'm going on memory. I know there were 2 or 3 or 4 others. I don't remember what they were. Let me pop back here. I'll have to check to see what's going on with my server there. Anyway, which one? ROK or MMM? What do you think? We take another quick look at 3M. So with this one, how about we trade 3M? So an exit might be if we get back up to those highs. Now, what a trader might also do is take off half a position if they get up to that initial target and let the other one run. Lalit says booking. Was that doing a similar thing, Lalit? Did you just run this? Oh, maybe it did. Let's see. Not quite. Nope, didn't get below that 25. Sharon and Timeless Classic and Chris B and Jay Reds is trying to say, let's do 3M. Okay. How about we do this? Let's buy some shares. What was this high back here? High of 164 and change. We're just going to call it 164. Plan to buy right here. Plan to exit if we hit that 164. Let's take off half if we get to that and let the remaining half run. But where might the trader place their stop? Well, that very commonly is placed at recent lows just below that. So let's give it a couple of bucks below that. Could be $1 or $2 or $3, could be a percentage point or 2 or 3. What was the low there? 144 and a quarter. Let's just call it 142 for our stop, 164 for our target. All right. So let's go place this trade. Let's see. 10 shares would be about $1,500. We tend to spend about $5,000 on trades in this webcast series. How about let's do 35 shares. Pretty close. Now let's do a round number. Let's do 30. That'll be nicely divisible by 2. Let's right click. Let's put in a custom buy order with an OCO bracket. So we're going to put in an order to buy 10. And we'll just put that in its market. You know what? I'm just going to put in that the order to exit the whole position at 164. I'm not going to split that position. We conceptually could. I'm not going to do that. And then we had our stop was down there at what, 142? Is that right? Make that a good till cancel order. Let me just double check that. The low there, yeah, 144. We went about $2 under that, 142. And that's going to be our trade. So let's click confirm and send. Buying 10 share, not 10. I want to do 30. There we go. Let's click confirm and send. Buying 30 shares of 3M at the market price. We're going to try to sell those at a limit of 164. We're going to have a stop down there at 142. Now, that stop is not a guarantee that we will fill at exactly 142. So with market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. We know that. And with stop orders, there's no guarantee that the execution price we receive, will be equal to or near the activation price, in this case, the 142. Let's send that order off. And with that, I'm just going to do this. Let's come up here to our studies and save this as our 3M money flow index and 100 triangular moving average. Our system. Guys, we've done what we set out to do today. I wanted to introduce you to this tool that some traders use to sort of follow the money. It's watching the flow of money as measured by a combination of price and volume. The money flow index. I hope this was an interesting discussion for you. We'll see how this trade goes. We'll follow up on that just like we did on previous trades in upcoming webcasts. So I hope that you'll join me in future Friday discussions. But do be aware that you have other resources outside of these live streams. Number one is channel. Yeah. Make sure that you're subscribed to our Trader Talks Schwab Coaching Webcast YouTube channel. You can subscribe just by clicking on the subscribe button down in the lower right-hand corner or down below the video stream right now. It only takes a second. It doesn't cost anything. And where we post our webcasts when they're completed. You can find those here in our playlists. Of course, you can join the live streams here, and you can do searches for topics of specific interest. So, for example, if you've never seen the money flow index before, maybe just type in MFI there, and you will find that webcast I did about 6 months ago with the more detailed breakdown of the construction of the indicator. Another thing that I would strongly suggest is that if you have an account with X, give us a follow there on X. You can find Mike there at Mike Fairborn CS. You can find me on X at Cameron May CS. And it really is the very best place to connect with your favorite presenters in between these live streams. Now, there's also a survey. So now's your opportunity to click that survey link. Give me some honest feedback. I will read through those comments. I read that data. It always helps. And thank you to everybody that's already clicked the thumbs up, that like button. If you enjoy one of our webcasts, I hope you have a habit of clicking that like button. It doesn't cost anything. That only takes a second, but it's like a pat on the back to the presenter for a job well done. But it also gives us a boost in the YouTube algorithm so that our webcasts can reach more people. So thank you, everybody. Yeah, 72 people have already clicked that thumbs up. Thank you for doing that. Guys, go have a great weekend. Enjoy the rest of the webcast through the end of today. I'll look for you in a webcast next week, or I'll also look for you on X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.